Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 17th of October 2020 and we're publishing our gold and silver weekly update for the weekend in the 16th of October. We also briefly look at political events and economic reports which could shape what happens to the US dollar and therefore precious metal prices this coming week. Gold fell $31 last week, from $1,930 to $1,899, having hit a high of $1,933 and a low of $1,882, a fall for the week of 1.6%. In sterling terms, gold finished the week at £1,471. That's down £8, or 0.5%. And in euros, it closed at €1,621. That's down €10, or 0.6%. Silver fell 99 cents, from $25.17 to $24.18, having hit a high of $25.58 and a low of $23.59, a fall of 4%. In sterling terms, it closed at £18.72. That's down 57 pence, or 3%. And in euros, it closed at €20.63. That's down 0.64 euros, or again down 3%. The gold to silver ratio rose from 76.7 to 1 to 78.5 to 1. So we see the gold to silver ratio appearing to find a relatively comfortable spot between 75 and 80 to 1 at this present moment in time. Bitcoin is up, standing at $11,375. As far as equity markets are concerned, the Dow Jones closed on Friday at 28,606. That's up 112 points on the day, but up just 20 points on the week. The S&P 500 closed at 3,483, up just 1 point on the day, and only just managed that, and up 6 points on the week. And the Nasdaq Composite closed at 11,671, down 42 points on the day, but up 92 points on the week. Brent crude closed at $42.93, up 8 cents. And WTI crude closed at $40.88. That's up 28 cents on the week. So again, crude prices now staying comfortably just above the $40 level. The dollar index stands at 93.68. That's up 0.63 on the week. Our conclusion last week stated, quote, "We are therefore raising our gold target slightly to between $1,850 and $2,050, that's $1,850 and $2,050, and silver $22 to $27, with gold most likely moving between $1,900 and $2,000, and silver between $23 and $26. While frankly allowing for highs and lows, this appears to be what has happened, albeit prices moving a little closer to the lower end of the range as opposed to the upper end of that range. Now looking at the gold chart for last week, gold initially edged up for a brief moment and then fell, with the largest fall being on Tuesday, with a slow and rather jagged or oscillating 10% recovery from its low to end the week down 1.6%. Now, yesterday we published a video entitled Positive Retail Sales Boosts Markets, but where we highlighted that some of the economic data published last week was indeed quite encouraging. However, it was quite possible that the economic tide has begun to turn with the increasing spread of the coronavirus pandemic. And we've placed a link to this video in the description box below, acknowledging that it did not come out until quite late last night. Now, gold barely moved on Friday despite these figures. But there was some disappointment in consumer confidence, which to some extent mitigated the positive retail sales news. From a technical point of view, gold is meandering around short-term support of $1,902, though it did just edge below it at the close, with resistance seen at the 50-day moving average of $1,927. Short-term momentum has turned negative, whilst medium-term momentum remains neutral. The MACD histogram suggests, though, a slow trend higher in prices. Now, the main reason for gold's fall last week was the strength of the US dollar, especially when one considers that the COVID-19 pandemic in Europe has worsened significantly, which has had an adverse effect on the euro in comparison. In spite of the US dollar gloomers and doomers, if such words exist, as far as the foreign exchange markets are concerned, the dollar is still seen as the main safe haven currency, which is why, if there is any geopolitical or economic negative issues occurring outside of the United States, the US dollar tends to be the major beneficiary. So gold, in our view, has an absolute floor currently, certainly within the next month or two, of $1,800, and a strong support level at $1,850, with resistance seen in a number of steps between $1,927, which is the next resistance point, and $2,000, which is why we can, to a large extent, comfortably say that $1,800 to $2,000 remains our short-term target range still. Unexciting, for sure, but we believe consistent and accurate. Silver followed gold's path, except slightly more extreme, though still within a relatively tight range. It rose initially and then, like gold, fell Tuesday and staged approximately a 15% recovery from its lowest low to settle almost $1 down for the week, or just shy of 4%. Most analysts are of the view that $20 is an absolute floor, and should, though it's extremely unlikely, but should silver fall beneath that floor, then the trend will have truly changed. $22, though, offers significant support. Now, it does appear, at least, that silver is attempting to reach and then hopefully hold above that 50 EMA at $24.55. And assuming it does achieve this, then an additional dollar rise to $25.55 is likely, with $23.90 offering support and $23.30 lying underneath. So you do have a number of support levels there. $23.90, $23.30, and then $22 with an absolute floor of $20. So again, we are more comfortable with our assessment of silver trading generally within $22 to $27 and most likely between $23 and $26. On the economic data front, jobless claims, though improving, their improvement is marginal. And whilst retail sales figures were up and strong, the industrial production index showed a minus 0.6% figure for September compared with a plus 0.4% figure in August. The consumer sentiment index for October was marginally up compared with September, but still at a relatively disappointing level. So with this in mind, let's take a look at what's happening this current week. On Monday, we have the NAHB Home Builders Index for October. Tuesday, housing starts and building permits for September. Wednesday, the Beige Book. Thursday, weekly jobless claims report, existing home sales for September, and index for leading economic indicators for September. So an interesting day, Thursday. And on Friday, the market manufacturing flash PMI for October and the market services flash PMI also for October. So frankly, a relatively poor level of economic data due this coming week, with most emphasis likely to be placed on that reported on Thursday and Friday. This then leads us nicely onto what other factors may impact both the US dollar and gold and silver prices this coming week in particular. Well, without hopefully sounding like a broken record, it's essentially three things. One, COVID-19, and whether a vaccine is established or not, and if not, what progress has been made, and whether it will be soon or into next year before such a vaccine is available. Two, any US stimulus measures agreed by Congress, though again it's uncertain at this stage if such will be introduced prior to the November 3rd general election in the United States. And then three, the progress made by the presidential candidates in that election, which now has a little over 2 or a little less than 3 weeks to go, with Biden apparently ahead by around 10 points in the polls, which seems to be holding, but we all know polls cannot be fully trusted. But we do believe it's fair to say that it's Trump who has the upward task at present. But we fully accept things can turn around in 3 weeks. Though we also suspect the president would have preferred Giuliani's daughter not publicly declaring yesterday, as she did, that she's backing Biden, together with a small group of ex-staffers. So, there we have it. Gold and silver performing steady, but boringly, and like the rest of us awaiting economic and political events to unfold. Now, tomorrow we are publishing part 3 of our new series, Peak Gold, and also on the Richard and Greg channel, another topical issue of interest in the series of empires and dynasties. Meanwhile, please share your thoughts as to what you believe will happen to precious metal prices this coming week. And thank you so much for listening. And if you haven't already done so, kindly subscribe to the channel. Not forgetting to press the bell sign so that you're notified of our videos as and when they're published. And of course, as mentioned, please pop over to our Richard and Greg channel. Again, if you can bear listening to Greg and I for half an hour to 45 minutes on certain subjects, you will be most welcome. Meanwhile, have a safe, enjoyable weekend and a most prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.